We got the message there, a bit of a blip in that package. I can only apologise to you. Michala, gentlemen, what do we think about the technology stocks? What is it? The NASDAQ is now at a 14-year high. Now, I'm pretty sure in the year 2000 it was on the way down from those 1999 highs. But this time around, we seem like we're going in the opposite direction. Do you trust the valuation? Do you like the valuations? You're a buy the dip man, aren't you? Or not on the NASDAQ?
Well, I think on technology, it's very easy to be cynical and think that the valuation are too high and everything is...
On a broad brush basis,
all
yes.
in all, if you look at the entire sector, obviously valuation are probably too high. On a company by company, you might think that few companies will be able to lead the sector, dominate the sector, and therefore justify the valuation that you have today.
Ben, is there anything that takes your fancy in the sector?
I'm glad I'm not a venture capitalist in the technology sector at the moment, because there's a lot of companies out there that I just don't understand, can't get a handle on. So Yo, for instance, you've seen the app Yo, where all you can do is just send the word Yo to your friends. That's got another $50 million of investment. I mean, what is that? That's not an app I can understand.
That's the whole business model.
That's the whole business model. That's all you can do. You send an app. There's no ads, no anything. They may have a plan, but I don't know. Right. Not every company's like that, and there are some in the tech sector that I like. I like the idea of going for big data. You know, people are using more and more data. I think something like 40% of the world's data.
It's getting crowded though, isn't it? I mean, you're talking about cloud technology, for instance. Or?
Well, more behind that. If you look at, say, the server storage, so EMC Corp in America has a massive play on basically getting servers and storage out there. That's quite interesting. You know, we know Amazon does the same thing, but I think they've got a few more business models that you need to get your head around there.
So the problem is we look like fools when we turn around though and say, yeah, but where's the business model? And in Yo, I mean, I don't know where it's trading, but for instance, you can see some of these shares and you say, I don't get the business model, but it's now trading at 500 times PE.
Yes,
and then the viewers quite rightly turn around and say, but you guys said you didn't get this company and that you couldn't understand how it had a future, and now it's valued X 100%.
Yeah, but look at CYNK, that sort of dodgy stock that was on the NASDAQ. It went up something like 5,000 times in 2 months, and then someone looked and said, well, it doesn't even have a chief financial officer. You know, that's when we look smart rather than dumb. And there are companies out there
so
where...
we haven't learned the lessons of the year 2000.
People get excited, right? You get excited when you see new tech. You look at Google and see what that did. It's hard to break the idea that this could be the one.
Well, I think you have to separate the NASDAQ into two kinds of company. There is consumer-facing company, brand, like a King Digital, that will have a lot of followers or a lot of people are buying the product or not. And you have company that are providing all the pipes within the internet. And right now, I would think that there's probably more value in company that are providing technical solution, whatever it's advertising, whatever it's cloud computing, that will make internet more efficient.
You remain long risk, but protecting downside risk is attractive. You're one of the few people I know who's bothered to look at downside protection as well. What are you doing to protect your portfolio?
Well, we have a put option on Euro stocks. We have a position on the VIX. I mean, we look at volatility across the sector, because we look at where is the best, where is the cheapest way to buy volatility. Right now, I think it makes sense to protect your downside because it is not expensive. If anything, there's very few things which is not expensive these days.
Trade the position that it gives you, the net delta position that holding those puts gives you, because too many people I know say, I buy my protection, but it expires worthless, and hence it's an expensive insurance policy that I'm never going to need. But if you trade it at the low volatility, you can make the money work for you, can't you?
Yes, you have to be dynamic. Otherwise, you set it aside and you will end up losing money at the end of the trade. You have to see it as one of the profit center, and in order to dynamically manage your hedge.
Okay, let me tell everybody that there is a flash on the wires that Russia is working on additional retaliatory measures in case Western nations impose new sanctions. This is being reported on Reuters, quoting the state news agency RIA and quoting the Kremlin as well. Downside protection at the moment, I mean, Yannick, it's a breath of fresh air, I've got to say. He's talking about trading his downside rather than just holding it as a stale position. Is it something you would advocate investors do, or you do it for them, or what?
Well, so we run multi-asset portfolios, so our cautious investors, say, have 60% in fixed income or things like that. We have to be
bubble territory, isn't it?
Well, exactly. So you have to be a little bit sensible about where you're looking in the fixed income space. So, a fantastic trade that I know it's certainly not only us have had on recently is the peripheral European bonds, right? Now you've seen Spain and Italy climb down from yields above 5% on the 6-year bonds.
7% at one point in the Italian.
Yeah, exactly. And you know what? That was mispricing the risk there. However, we've now exited that trade as we think, they're getting closer and closer to Germany. But as we all know, unemployment in these countries is ridiculously high. They're not Germany yet. You need to be a bit clever with the fixed income.
What do you think about the rally we've seen in this peripheral European debt as well? I mean, quite extraordinary. 2.4%, 2.6% for Spanish and Italian, respectively.
Well, when the central bank goes in and effectively says that if there's any sovereign state that has a funding problem, they will make sure that the European rescue mechanism will have enough money to provide the funding, then I think you have your answer there. It's clear that the ECB's OMT was a very big driver behind the rally. Where I think it's really interesting at the moment is how Draghi is beginning to talk more and more about the importance of structural reform. Here we have a central banker coming out and telling governments, look, you really do need to do your structural reforms.
And you've got Sapan telling the ECB to do more for the euro. So it's a tennis match, isn't it? You do it, you do it.
But I think, in this tennis match, if we look at what's been agreed in terms of the European semester, there has been an agreement that more structural reform is needed. And I think if we look at what is needed to drive Europe forward, a weaker euro, I'm not saying it's a bad thing per se, but that is not going to fix the growth engine. And Japan is the lesson on that.
For sure. OK, well, look, we'll leave it there just for a moment. Maybe we'll explore this in the last half an hour of the show. Yannick, we're going to say goodbye to you. Very nice to see you. Yannick Naud, Portfolio Manager at Sturgeon Capital. Ben, nice to see you today as well. Ben Kumar, Fund Manager at 7 Investment Management. Let me just tell you that coming up, our colleague